Okay, so we start here on the H4. On the H4 we can see we have a run on liquidity and a break of structure, and another run on liquidity and break of structure. We have our green range, which is our H4 range. Okay, we have our H4 range. So now price has no internal range liquidity here. So if there's no internal range liquidity, we might just take out some liquidity here and drop. Or we can create a T2. So price can come in there and generate the liquidity like that, and then create liquidity and take it, then drop like that. So we go to lower time frame. I went to my M15. Then when I went to my M15, I had a run on liquidity here, okay, and price mitigated the H1 unmitigated wick. I think no, it was a H4 unmitigated wick with a run on liquidity. So if you go to M15, we have our structure like this. So I was looking at all this internal range liquidity and the market structure shift. So after a market structure shift on my M1, we have our run on liquidity and the break of structure. This was my BOS. Then we had internal range liquidity here. So price needed to generate some liquidity, which it did here, created inducement. Then this level was my M5 key level. M5 key level here, unmitigated wick. So that was my entry with a 2 pip stop loss. 2 pip stop loss. With the 2 pip stop loss, I entered there. Then price took out this low, but it also took out this high. It almost took me out. So I saw this as a range. So this was a run on liquidity, break of structure. So I was looking at this as a T1 to go up. So as soon as it broke my level here, I put on break even, then it took me out and went straight for my target. That happens. Then on the second trade, we have our black range taken out to make this range bearish, which was from here. My range was from here to there, range confirmed, but the BOS there. So this range was no longer valid. We are now bearish. So I'm expecting today price to come down here when it takes probably some liquidity here, then drops like that. But we'll wait and see what our Asia finishes. Anyway, on this one, we have our M1 range again. From here to here, we have a range, run on liquidity, break of structure, run on liquidity, break of structure. Then we have a PRI. I think this was 30, I think, yeah. It's an M30. So if we go and check, in 30 minutes we have our unmitigated wick here, okay? Then we went to my entry time frame, 1 hour, 1 minute, and we have internal range liquidity just above the POI. Set my entry there, stop loss below, and went to target. As you can see, we have our trap here. We have our trap here. This is where people are selling. Smart money traders are selling. They're selling here. Okay, but I knew that this will not take out this low because of the trap, and price went to the upside. So we also have a trade that I missed. If you see here, we have a red range from there to there. Okay, so price took this internal range liquidity, so that could have been another entry from here to here. Let me just show you. That could have been an entry from there to this external range liquidity, but I missed this trade. So how I'm trading is I just trade from internal range liquidity to external range liquidity. I don't swing for long targets like this. I don't trade like this at the moment, because price can break this. Price can break this, come and break this, then do this and go up. So instead of taking your 5R, because you're greedy to take the 19R, price can actually just come here and then go up. So I make sure with the range that I'm dealing with, I target the external range liquidity. So this was going to be a very nice trade, about 1 to 7.5. So I missed this one. It happens, but clearly you can see that's a range. There should be a POI on top of this. Let me see. Let's just have a look what POI we have between these ones. Start with our H4. What do we have on H4? On that range, let's see. On this range, we don't have anything here. H1, we have unmitigated wick. Okay, so we have that unmitigated wick. Then on M30, we don't have anything. M15 we have our unmitigated wick right here. Okay, so then we go to the entry time frame, which is our M1 with those two key levels. So what do we have? This key level, you can't take it. Why? Because we do not have any liquidity on top of it. We could say this one, yes, but that's too far away. Okay, so this is invalid. Just remove it. Just remove it like that. Then we have this key level. So our entry would have been on this POI. Here, probably to that order block. Like that. That would have been a nice entry, targeting our external range liquidity here. Okay. Then the next trade was on GBP JPY. We have our range on H4. We have our H4 range here. Price is moving like this in a bullish way. It's a bullish range. Okay. So I'm expecting this high to be taken. So now I went to my M15. As you can see, we have a run of liquidity here and a break of structure. Then it took out this high. So I went to my M1. M1, we have a confirmed range. From here to here we have a range. Then I went to my H1 for my key level. So my H1, we have an order block, this one. Okay. Then went to my entry level. We have liquidity above the order block. Yes, we do. So there is the liquidity, entry set there, but I did not want to put my stop loss here because we have internal range liquidity here. These equal lows could be run, then price went straight to take profit. So let me know if you have any questions, but thanks for watching.